So dear students, today we are going to start a new topic, which is about the merger and reporting the financial performance. Actually, we have started this topic at the last class, but we haven't completed, and we are going to complete starting from depreciation methods. So the first of all, just wanna remind you that we are going to start from the topic, theory questions. Then we have some practical exercise based on the depreciation theories. And as well, I would give you a homework assignment, which would be based on balance sheet, income statement, and as well on the depreciation methods theories. So we have a homework for this class. So I think that we can start already. So most of you are already here in the class. We have talked about the profit and loss account or the income statement at the last class. We have recognized what kind of expenses we have, what's revenue, what's the accruals and prepayments, do you remember? So right now we are going to continue with the depreciation. What is actually depreciation? Depreciation is requires a consideration of the cost, useful life, and residual value of an asset. It also requires a consideration of the method of depreciation. So today we are going to study about what is depreciation, why the companies to depreciate their assets and what kind of methods we have in the depreciation and which method is often used. So we have two kind of methods which is often used in the companies of businesses, which is the first one, the straight line method, that maybe you have heard about this. And as well we have the method which is called the declining or reducing balance method. What is straight line method? Straight line method of depreciation is allocate the amount to be depreciated evenly over the useful life of the asset. So what we do actually, we are going to make a depreciation for the assets. First of all, we are depreciate fixed assets which have a long life useful, and we are going to depreciate them because we are going to make a provision for those assets. They are no longer used, for example, during the life. They have a useful life. For example, as the motor vehicles or some equipment which is in fabrics. They all have a useful life. For example, as well as the computers. Most of say like we work around 5 years, for example. So, and to make a provision, we depreciate those assets, which means we are going to save a little amount from the cost of the assets in the future to buy a new one, which the useful life of the rest of assets would be already spent. So, and in the straight line method, we are going to, when we are going to make a calculation to find the depreciation cost, we are taking the cost of the assets, any kind of, which would be, for example, motor vehicle or the car one, and we allocate this amount through the useful life of this car. And then we can find what kind of depreciation costs we have get. Later I'm going to show you the formula, and we have some practical sites that would help you to understand more clearly. What about the decline, or sometimes we call it the reducing balance method? Applies a fixed percentage rate of depreciation to the written down value of the asset each year. So to make calculation to find the depreciation cost by the reducing balance method, we use the fixed rate, the percentage rate, depreciation rate for the assets. So I'm sorry, just 5 seconds. So we are depreciation. We are going to depreciate the assets, which is the main, which is the fixed assets, which have a long life and which use in the business to run a business actually, right? And when we buy these assets, helps us supplements to make a business like equipment, motor vehicles, or even the buildings on lands, where we are not going to have a purpose for them to resell it in the future. Mainly we are buying to use it to make a business as long as we can, right? So as well, here is said that we have some tangible fixed assets like a machinery, motor vehicles. You know that they do not last forever. Sometimes they need repairments, and we are trying to save some provision for them in the future to buy new ones or to have money for repayment. So why we do the depreciation? That's why we are going to the make calculation for depreciation cost to save some money. And the reason for the future's provisions. So and as well, if the amount is received on the disposal of the fixed asset, that means, for example, when we have some kind of fixed assets which would be sold later, and we receive some money from these assets, like we have some computer, for example, we use it for 5 years. Then we already depreciate that computer, right? And after the 5 years, maybe this company is no more using maybe the programs, or it's not fashion already, or not adaptable for new markets, for example. And we are trying to sell it, and we are getting some money. That money calls that the payments, which is called disposal value or the salvage value. So but this doesn't mean that this computer, for example, if we use the 5 year, that after 5 is not using more. Maybe some equipments could be used as well more than 5 years, more than useful life. I mean, for example, you know that. So, and when we are trying to receive some money from the sold assets, which is old already, so we are deducting this amount from the cost of buying of these assets. And the value, which is received of the fixed asset, can be said to have depreciated in the value. This seems like some very difficult in the explanation, so I want to show you some kind of exercise which would be help us to understand more better. Okay, so just a moment. Let's move on. So here is some kind of another statement which explains what is depreciation actually. Is that the part of original cost of the fixed assets that's consumed during this period of use by the business, that we call that the part of the original cost, that the cost which we have bought it in the past. And it needs to be charged to the profit and loss every year. So the depreciation cost we are trying to show in our income statement, and as it's the company's cost, and it as well to reduce the net profit. That all companies do like this. They will show them the depreciation as a separate cost. Another one, the amount to be charged in a year to profit and loss depreciation is based upon an estimate of how much the overall economic usefulness of the fixed asset has been used in the accounting period. That means, like, if we do prepare the income for this year, for the last year, for example, for 2012, we are going to prepare the income statement at the end of the year in December. So we have some kind of equipment, like, for example, some machinery which is used in the fabrics. So in the income statement, we have to show that the depreciation cost of this equipment at the dose amount, how long it have been used already. For example, if we use it 3 years, the 3 years ago we have bought this equipment and already going to use it in the future, and we have to show the depreciation cost of this equipment by the 3 years. Like it's the provision for the 3 years, okay? So let's see what we have. What kind of causes here is just given to you examples. What kind of causes of depreciation could be that why our assets is no longer for use for over the life, because some of physical deterioration, the wear and tear, that erosion, rust, rot, or decay could be. Some economic factors could be affected. Some obsolescence, out of date, like no more use. Inadequacy, no longer in use because of the growth change in the size, like the company has grown and needs another equipment or new equipment one. The time as well, the legal life fixed in terms of years, rent, or patent. This is about when we use some talking about intangible assets like rent or patent. We have like to buy each year or each 5 years, like this. As well, some depletion, the other assets are wasting character due to the extraction of raw materials from them. So this is we talk about the special, the professional equipment which use the fabrics or factors. So all these kind of fixed assets, they have some kind of causes of depreciation over the useful life there. So here is just example for you to understand why we should to make a provision for the fixed assets. Okay. So right now we are going to talk about the depreciation methods, because, for example, to make a calculation to find what kind of depreciation cost of any kind of assets, we have to first to define what kind of method we can choose, or we have to choose, or we would like to choose in our business. Sometimes the company, they use the combination of 2 or 3 kind of depreciation methods. It depends on the company, depends on the nature of the business section. The most of the simplest and used method is a straight line method. So in this method, the company estimates the salvage value of the asset at the end of the period during which it will be used to generate revenues or useful life. That means tourist companies assume that they have, after the using any kind of assets, after the using of the useful life of this asset, they would have some salvage value or disposal value, which means like they can or could sell these assets and get some money. So this is a salvage value. The salvage value, how we could make a calculation, just get the depreciation cost and deduct from the original cost of the assets. Okay. And here is says that as well, the salvage value is an estimate of the value of the asset at the time it will be sold or disposed of. Or the salvage value could be positive. We can get some money from the assets which we used, for example, within the few years. Or it could be equal to 0. We won't have any kind of money value after using the assets. Or it sometimes could be a negative one as well. So sometimes for salvage value, we say that, or we call it a scrap value or residual value. As you can see here, is this the words are all synonyms, so you have to remember them. Won't be confused in the future. Just want to show you first. So salvage value here is as well as a scrap value of the assets, or the residual value, all the same things. So in the future, if you have any kind of practical exercise, so sometimes you would be meant the term as a salvage value or the scrap value. So this is the same words that you want to So here is, in the straight line method, we have a formula how to make a calculation to find the depreciation cost. So first of all, let me show you. Here is to find the annual, the yearly, the depreciation expenses of any kind of fixed assets. The first we have to take the cost of fixed assets, which is original cost of the assets, of the equipment, for example, and deduct it at the residual value, or we call it scrap value, that for that amount which is we are going to maybe sell it or have it in the futures after using the assets. After that, we are going to sorry, I just want to see. So after that one, we're going to divide on the useful life of the assets, like how how long the assets would be using in our business, in our company. Let me show you in the exercise, in the practical exercise, how it happens actually. So, example, here is. If a lorry or the motor vehicles was bought for the 22,000 of USD, this is original cost, okay, or cost of fixed assets we call it, and would be kept for the 4 years in the company, and then be sold for the 2,000 of USD. So the depreciation to be charged each year would be, so we are going to use, we have bought already a car, right? The lorry. I'm going to use for in the company 4 years only, and then to sell it for 2,000. So to find the depreciation cost of these assets, we have to use the formula based on the straight line method. So we're going to get our original cost, which is the 22,000, and minus deducted the disposal value, which is scrap value, 2,000, and divided on the 4, which is the 4 years useful life of this car. It's not means that this is the useful life, the whole useful life of this car. We are going to keep this car 4 years in our company, use it 4 years only. So you have to divide the value for those years which you are going to use the keep in your business, not how long you are not for the amount which would be used for the whole life of any kind of assets. Okay. So at the end we have got 5,000 USD, which is the depreciation cost for each year for the 4 years. So each year we have to show that our depreciation cost for the lorry is equal to 5,000 USD. And we have to show it in our income statement during the 4 years. Okay? And at the end of the 4 years, we show that we got the disposal value, the scrap value for the 2,000 when we will sell this lorry. Okay. So I have some questions. Let me see first. So some of you asking me if we can count or keep that car for 5 years. So you have to just divide it for not the 4, for the 5 years. So 22 minus 2 is 20,000, and you just divide on 5, you will get 4,000 depreciation cost for each year. Okay, it depends on the company how long it's going to use or keep the assets in the business, like a lorry here is. So let's move. Yes, there is. In the balance sheet, we also, as well, we have to show the depreciation cost. And in the balance sheet, you have to show separately the original cost of the assets and the depreciation cost, which is accumulated, which depreciation cost of the all assets. And have to be separated, shown how much is the original cost and how much is the depreciation cost in the companies. Actually, you can't just deduct it and show the balance only. So you have to show the each step, like original cost. This is based on the accounting principle that always we have to show the origin cost of the assets in any kind of financial statements, and as well you have to show the depreciation expenses. Okay. So let's move. Let's start about what is decline or reducing balance method. Okay. So we call it declining. Sometimes you would find the word reducing or as well double decline balance. So the salvage value in this method is not considered. So we're not going to show the consider about to determine how much scrap or salvage value would we have any assets when we use actually the decline or reducing method. But the book value of the assets should be depreciation, and it's never brought below its salvage value. So, and when we use the decline or reducing balance method, so here is the depreciation cost seized when either salvage value or the end of the assets useful life is reached. So this is, let me show you in the examples. This would be more easily. The first of all, here is I want to show you the formula. What kind of formula we use in decline balance method. So how to calculate the depreciation cost? We have to take the book value. It's not the original cost of the assets. It's a book value. We'll show you later what it means. And multiply on the depreciation rate. But what is the book value? How we could find it? Just take the original cost of the assets and minus its accumulated depreciation for the year, for each year, okay? And the second kind of formula when we use in the double decline balance method is take a straight line depreciation rate, which is used in the straight line depreciation, and just multiply on the 200%. So it would be 2 times the depreciation rate in the double decline balance would be by the 2 times more than in the straight line. Okay. That would we show you in the example 1. Let me show you here is the first one. So right now I'm going to explain you the example based on the decline or reducing balance method. So you would be learn what is how we would make calculation to find the book value. Okay. So here is on April 1, 2009, the company A purchased an equipment at the cost of 140,000 USD. So this equipment is estimated to have a 5-year useful life. That means we are going to use in the company keep in the company for 5 years. At the end of the 5th year, the salvage value or residual value will be 20,000. That means after using this equipment within the 5 years, we will have some kind of scrap value after using this equipment. It will be equal to 20,000. And company A recognize that depreciation to the nearest whole month, that is going to depreciate it nearest to 20,000. So calculate the depreciation expenses for the years 2011, 2012, and 2013 using the double decline balance depreciation method. So first of all, the useful life of this equipment is equal to 5 years, right? This is by the straight line. In the straight line, how we do calculation? Just take a original cost of the equipment, 140,000 minus deducted by the 20,000 of the scrap value or salvage value, right? And then you have to divide for 5 years. It's just let me type you. That would be very easy. 140,000, 140,000 minus 20 is equal to 120,000, right? And divided on the 5. So we have calculators. Just let me do these simple things. We have a 24,000, right? So the 24,000 is the depreciation cost of the equipment for the each year, and this is by the straight line method, which we have to find, right? Yeah, I want to just show you just like this. This is the formula, which is the simplest in the straight line method, how to find the depreciation cost by the straight line method, right? But right now we are going to make calculation to find the depreciation cost by the decline balance method. Here is, so at the straight line, depreciation rate is 1 to 5. It's around 20% per year, right? Next one. As you remember, by the formula 2 in the decline method, to find the double decline rate, you have to double your straight line rates, which is like 20% we have got. In the decline double method would be 40% per year. You see, it's more than it, 2 times more than in the straight line method. Yes. So this is for each year. So then we are going make a calculation based on the formula 1 for the year 2011. So 140,000 multiplied on 40 percentage rate, which is by the double decline method, and you'll get the 42,000, right? So let me see, and you have to multiply on 9 and divide on 12. This is 12 months in the year. 9 is because we have bought this the equipment in the April, if you remember. Let me see. Yes, in the April. So we have to make calculation. If we have bought the equipment in the April, so we're starting it used from the April 2011, right? And you have to make calculation in how many months we are going to use in this equipment in the year 2011. From the April to December is 9 months, right? 9 months only. It's not full year. So because we are buying in April only, in the April only. So you have to remember about these things. So in the first year, and at the end of the 2011, the depreciation cost of this equipment will be equal to 42,000, right? Based on the formula. Any questions so far? So first, we have to get the original cost of the equipment, which is equal to 140,000, right? Then multiply on the depreciation rate, which is 40%. Why? Because we have make double the percentage from the straight line, which being 20% only. Then we multiply on 9 and divide on 12. This is because of the months in the year. How many months we have used this equipment in the year. So starting from April to December is only 9 months, right? So after calculation, you have got the 42,000 of depreciation cost for the first year. So some of you asking me where did we get the 20% of the depreciation rate. 20% of depreciation rate, this is 20% by the straight line method. You remember we have done some formula? Just let me show you again. So, in the depreciation rate for double decline method, you have to take the straight line depreciation rate and multiply for 200. To just double it. To find the double decline rate, you have to double the straight line rates. Okay. The straight line rate was the 20%. Why? This is here is want to show you. We use the we are going to use the equation for 5 years. The 1 divided for 5, it will be 20%. In the percentage, it's 0.2, right? Just multiply on 100, you will get in the percentage. So it's about any kind of assets. If you would like, for example, you are using them some equipment for 10 years, and to find what the percentage, the percentage rate in the straight line of this equipment which is going to be used in 10 years in the company, just you should take a 1, divide on the 10, then you'll get and multiply for 100 to get in the percentage. Let me show you first. And then you will get 10% of the depreciation rate right here. Right? Yes, right. So this is how we could find the depreciation rate by the straight line. So first, and in the declining method, we have to first of all to find the straight line depreciation rate and double it. Then we can use the double decline rate, which would be 40% right here in this example. This is just a simple calculation, but you have to remember this is very important. So next one. Okay. Some of you are asking what is the 200%. That means if you would like to double the depreciation rate, just multiply for 200. That means just multiply for 2, you'll get 40% of rate. That means 200 of percentage rate. For example, in the straight line method, we use 100% of rate, right? In the decline method, we use a 200 of percentage rate. Just you can't ignore it. Just you should use this formula right now. Let me highlight it. Like get the straight line rate and double it for 2. You'll get the double decline rate. So let me, okay, we have some question, I have some question about how we can get the percentage. So let me first explain the exercise, and then I would explain where we can get the depreciation rates, okay? So then, depreciation for 2012, we do the same calculation by with the previous formula. So here is, firstly we have to get our book value. You remember book value? What is the book value? The original cost minus the depreciation cost. So to make calculation to find the depreciation cost for the next year, you must take your original cost. Here is 140,000, and minus it your previous depreciation cost, your depreciation cost from the previous year, which is 42,000, right? Here is this one. And then same steps, multiply on 40 depreciation rate, 40%. And as we are going to use it whole 12 months in the 2012. If here is given to you, just multiply for 12 and divide on 12, you just can ignore. And then you will get the depreciation cost for 2012, which would be 39,200. So, and after the next years, we do the same calculation as we have done in the depreciation for the 2012. I have prepared some table, then you can see, would be more easier for you. Let me show you. Here is, you remember we have done some calculation for 2011. We have taken the original cost, book value at the beginning. It's the same as the original cost because it's starting only to make a depreciation. Then multiply on the 40 we have got and divide on the 9, which is we use only 9 months in the 2011. We have got the 42,000 of the depreciation expenses, right? And to find the book value, we have to take the original cost of the beginning cost of the equipment, which is 140, and minus your depreciation expense, you will get 98,000, which is book value at the year end, at the end of the year. The next year, you will start to make calculation with the book value of the previous year. You remember? You have taken the 98,000 of the book value, multiply on the 40%, you will get 39,200 of USD of the depreciation cost. So here is to find the book value at the end of the year, which is 2012. You have to take your book value at the beginning year, which is 98,000, minus your depreciation cost, which is 39,000. You will get the book value at the end of the year, which would be equal to 58,800. So, and for the rest of year, you do same things. And at the end of the 5th year, you will get depreciation expenses, which would be equal to 1,168,000. And where is the book value, which is as well we call scrap value, would be equal for 20,000, right? At the end of the 5th year. You see? You remember in the assignment, it was given that this equipment would be sold after the using of 5 years in the company for 20,000. So, and at the end of the 5th years, we have got the book value at the end of the 2015, which is equal for 20,000 for the amount, for the value which would be sold out. So this is how we make a calculation based on decline methods. So how we have got 20,000? Here is just giving you explanation. So we have taken the book value at the beginning of the 2015, which is the 21,168, minus your depreciation expenses of the 5th year, which is equal to 1,168. You will get the 20,000 of the book value or scrap value at the 5th year, at the end of the 5th year. Here is 21,000, which is book value of the beginning minus 20,000. So as you can see, at the 5th of the year of using this equipment, we have got the 1,168, which is depreciation cost. So it means it's already a small amount, and at this point the depreciation would be stopped because we are going to resell this equipment. You remember? it says that the company will be used only 5 years and then would be sold out the equipment. So, and as you can see in the decline method, depreciation cost, the value of depreciation expense would be higher in the first of years, in the earliest years, and then it will be declined at the end. You see, we can see some decreases in the amounts, in the value. This is why that this depreciation method calls decline balance method or reducing balance method. So some of you asked me how we could find the 1,000. This is based on the formula that we have used for the first 2-3 years. 21,168 multiplied on 40%. So then you will get your depreciation expenses. Just trying to use your calculator. That would be best hit. So anyone want to make a calculation, you can find the amounts. Here is. So okay, if we are going to make a calculation based on the formula on the 5th year, on the last year of the equipment, you can find that the depreciation cost would be different, right? Because we are going to sell this equipment for 20,000, which is very important. You remember, we are going to sell this equipment after the 5 years of using for 20,000. For depreciation expense, it will be changed because we have checked. We cannot put the depreciation expenses, which is the original one, would be for the for the last year, which would be around 8,000, right? It's a lot. If 21,000 minus 8 would be very lesser, then we are going to sell this equipment in the future. So that's why we have to just deduct our first book value of the beginning year, and from the salvage value, which we are going to sell it, which is disposal value, which is the 20,000, and put the balance under depreciation expenses, which would be the 1,168 only. Okay? So you should consider about this formula. It's very important, this one. Because of the company wants to resell this equipment after 5 years of usage, going to get some, benefit from the equipment by the 20,000. It's going to decline depreciation expense at the 5th of year, and just get the balance between the book value at the beginning and the book value at the end of the year, and put the amount which is equal to 1,000 as a depreciation expenses. This we can do like this in the accounting. We can do if we are planning to resell any kind of assets. So it's like the formula would be changed by the year of 2015. Okay. But this is in this situation because the assignment says that we are going to sell it for 20,000. So the nearest we can assume the depreciation expense would be differ from the formula. But actually, it depends on the company. They use a different kind of methods, like to reduce the income, the profit by the depreciation, to be paid less expenses for the taxes, and for like a different kind of purposes. Sometimes, like the companies wants to show they have a high profits for the year. Like, for example, this happens when the company wants to get some loans in the bank to borrow some money to open the credit lines. Like, they are doing like what they are like. They are not declining the income statement by the depreciation, because the depreciation, it would be reduce the profit of the company, the net profit of the company, right? And sometimes the companies, they do like, it's called like special ticks, which is using the accounting. If you would like to show your profit, increase your profit, so you won't deduct your depreciation from your statement. But at the a different situation, if you would like to like pay less taxes based on your profit, so you will be decrease your net profit by the depreciation expenses. You see, it depends on the companies, which is method the best would be suited for that moment. I won't teach you about what to do, how to make your profits more or less than would be, because it's like, you remember, transfer view of your accounting statements. That's not be like I don't know, the good things. But it's not mean that you are hiding your profits. Yeah, sometimes it looks like you are going to hide your profits, like to depreciate all your assets by the high rates or something else. But this is a business, so this depends on the companies. So you never mind about those things that I have told you. This is just my thinkings, my thoughts only. So let's move. We have another kind of assignment based on depreciation. So based on the decline balance method, another assignment for you, which is the simplest than the previous one. Let me show you. Here is, if a machine is bought for 10,000 USD and the depreciation is to be charged at 20%, the calculation for the first 2 years would be as follows. So here is, so original cost is 10,000, right? So first year of depreciation would be 2,000. Like, we have 10,000 multiplied for 20%, we'll get 2,000, right? This is just simple calculation. So the book value at the end of the first year would be 8,000. For the second year depreciation, you have to take 8,000 of book value, multiply on 20%, you will get 1,600 of the depreciation costs. Then you have to deduct this 1,600 from your book value, which is the 8,000, and you will get book value for the second year, which would be 6,400, right? And for the first year, we are continuing with the same formula, taking the book value and multiplying on the 20,000 of depreciation rates, and we can get depreciation costs for the third year, which would be equal to 1,280. And to find what kind of scrap value we have, just take your the depreciation cost at the end of the third year, which is 1,280, and deduct from your book value, which is in the beginning of the third year, which is the 6,400. We will get your scrap or residual value of the machine, which would be equal to 5,120. So then it depends on the company. So if you want to sell this machine for 5,000, it can be resold. It depends what kind of plan the company have for this machine. This is just same same exercise, but it's more simply than the previous one. Okay, the main question is, as I can see, that about the percentage depreciation rates, right? How we could find. You see, in the example number 2, it's already given to you that how much depreciation rate would be for this machine. How much is depreciation rate? It's the 20%, right? So when I would give you practical exercises, some practical exercise would be already include and show you how much the depreciation rates for any kind of equipment. But in in the rest of situation, you have to make a calculation based by yourself actually, which is I would explain you in the previous exercise. You remember? If starting from the straight line method. In the straight line method, we don't have any kind of percentage rate, right? Because we just have to take the original cost. If you have some salvage value, deduct the salvage value, and divide on the useful life of the equipment. That's all, right? No any kind of percentage rate. But when we are if we are trying to find the depreciation rate in the declining method, we have to see how many years we are going to keep this equipment in the business, in the company. Let's assume like I don't know, 3 years. But straight line, the rate would be one like divide on 3, which is 3 years, and multiply on 100 to get in percentage. So you will get 33%, right? It's around 33% in the straight line method. This is based on the straight line method, for example. Like that. So, and to find the depreciation rate by in the decline or reducing balance method, you have to double it the rate which is in the straight line method. Like if it's 33%, it would be 66%. But it's a lot, right? But this would be like by the reducing balance method or decline. And as well in the accounting, the accountants, they use like special the list of the depreciation rates for each kind of assets. But I cannot tell you it's just a fixed rate for all kind of types of companies or firms or organizations. As the company with different nature, they have a different kind of equipment, and which would be the useful life would be, the depreciation rate for those equipment would be differ from the company, right? But often, when I give you some practical exercise based on depreciation rates, I will give you the depreciation rates, exactly how much it would be. It would be easy for you to make a calculations. I have another kind of practical exercise based on depreciation. Just I want to show you. That would explain to you more deeply. So we have, in the accounting, we have some standard rates for some standard fixed assets like land. For example, for the buildings, as I know, it's around 15% of rate of depreciation. For the land, it's like 10%. For the motor vehicles, it's around 20 or 40, 22 to 40% of depreciation rates. But it depends on what kind is the motor vehicle. Is it lorry or car or bus or special professional motor vehicles which is used in the fabrics or factories, you know? That depends on, you see, on the assets itself. We cannot make the list of the fixed depreciation rates for all the kind of assets, because we have a lot of different, the range of assets, which would be difficult to put on the list. So we have some tips for some the fixed rate that we can assume that would be used in most of companies. Like as I told you, for the cars, for the vehicles, it's from 20 to 40% around. For land buildings, it would be lesser, 10 to 15% depreciation rate in the percentage. So here is another one thing which is very important: choices of method. You might think that which method is the best one to use in the companies? You can use one method, or you can use in combination of two methods or three methods. I just show you only two methods, which is the most used in the companies. So it depends on the method selected should be that which allocate the cost to each period according with the proportion of the overall economic benefit from the using the fixed assets itself. That means, first of all, depends on companies, the economic benefits. For example, like in the reduction balance method, the highest depreciation cost would be taken from the earliest years. So if you would if you just startup company and you have bought some equipment or assets, and you want to pay less taxes, you can use the reducing balance method in this case, because you can deduct your depreciation cost, which is the highest in the first years, and show you that you have a less profit at the end of the year. But if the benefits, like you would like to get the benefits to gain evenly over the year, then you can use the straight line method. It would be more useful for those companies. So as I told you, the reduced or decline method, they have a much higher charges in the first years, in the earliest years. So it depends on the company. Sometimes the company use the depreciation method in the combination. Like for some kind of assets, they use like straight line method. For the rest of they could use the reducing balance method. So that's all for depreciation. About depreciation, let's move on the practical exercise. Just prepared for you some simple one to show you how can make calculations. So here is the question. The question one: a car costs 9,600. So the original cost of the car is 9,600. So it will be kept for 3 years and then sold for 2,600. So we are going to use the car 2 years in the company and sell it for 2,600, right? So you have to require to make a calculation of the depreciation expenses based on the decline reducing balance method at the rate of 35%, and the B1 based on the straight line method. I have the answers. If you would like to do right now the calculation, this is a simple one for 3 years only. Just show me in the charts. Okay, I have some question like who is and how the depreciation rate is being assigned, and how it's allocated. So, first of all, in the straight line method, the depreciation rate depends on how many useful life or the equipment will be used in the company, right? You remember there is no raise. We just take the original cost and divide on the useful life of the assets. Then we can see how much we can get the depreciation cost for each year, right? But in the decline method, we just have to double the depreciation rate, which is in the straight line. As I told you that there is no actually, which is the depreciation rate in the straight line, but we assume that we should take the 100% divide on the useful life. Then you will get the depreciation rate for the decline method. Just you just have to follow the formula that I was giving you. So let me show you. Okay, some of you already have given me the calculations based on the straight line, as you can see. Yes, that's correct. That's very good for the straight line. So you just have to take your original cost minus your salvage value and deduct on the 3, which is useful life, right? You'll get 2,333 depreciation cost for each year. What about decline reducing balance method, which is already giving you the depreciation rate 35%? Anyone wants to show the calculation for 3 years only? You have to make calculation for 3 years to show me how much you can get depreciation cost from the first year, at the second, and at the third of year. Okay, let me show you the answers if it's difficult for you. Because you should have these slides already, because I have sent this morning, morning by my time, I have sent you the presentations. You have, and you can see the previous slides, what formula we have. For the first year, you have book value. Okay, let me see first one. Okay, right. This is the right. For the first of the year, the book value is equal to 6,240, right? The depreciation expenses is 3,360, right? Just take 9,600 divide on or multiply on the 35%. Then what about the the second year? Anyone wants to show me the depreciation cost for the second year? Take the book value at the end of the first year, then divide it on the multiply on the 35%. You will get the depreciation cost for the second year. So the first year I have got, okay, this is right. The book value for the first year, the second year, okay, let me see. For the second year, I've got a depreciation cost 2,184. Anyone have the same? No. Okay. Okay, let me show you the answers. That will be best. Okay, here is. So straight line, let's start from the straight line. You have given me a correct answer. For each year, we have the same depreciation cost, which is equal to 2,300 for each year, right? And at the end of the third year, we have a disposal value, which is 2,600. That's good. For the second one, already you have given me, that's okay. What about the reducing balance method? So we have original cost 9,600 divided on 35%. You can get the 3,360, which is the depreciation expenses. Then 9,600 minus 3,360, you'll get the 6,240, which is the book value, right? From this amount, you have to make a calculation for the second year of depreciation cost, right? 6,240 multiplied on 35%, then you'll get 2,184 of depreciation cost for the second year. Okay, that's very good. So I already got answer. That's very good. So now you do understand how to make calculations based on two kinds of methods, the straight line and the reducing balance or decline balance method, right? That's very good. So you won't be confused with the depreciation rate, because at each of the practical exercise which will include the depreciation methods, you already will have the rates. I would show you that you have to make a calculation based on 20% or the 40%. Or if it's straight line method, you won't be use this. You won't be use depreciation rate, because you have to allocate the whole original cost by the useful life of this equipment, right? Or equipment or any kind of assets. So that's all for exercise. So that's right now I want to show you your homework assignment number. This is homework assignment number 6, which would be based on the balance sheet for the based on the previous topics, income statement, and the depreciation methods. So let me explain you, because here is we have some difficulties. You might think you might need the time to solve the exercises. So you will be given 3 kinds of exercise: based on income statement, balance sheet, which you have done already, and based on the depreciation methods. The first one, exercise number 1. So the following items here is given you a table listed in the alphabetical order. So you have to prepare the income statement from the table which is given in the gray box. Okay, here is given the items, the transactions, and the amounts, the values of those transactions. So you have to prepare the income statement and show me the net profit of this income statement. Just giving it in alphabetical order, you have to put on the right places. You have done the same, I think you have done some same kind of exercise. So even you have some presentation how to prepare. Any question based on this exercise? If no, we can move. Okay, next one. Next one is the preparation of balance sheet. The following items are given as well in alphabetical order, so you have to prepare the balance sheet and answer some additional questions. First of all, the first of assignment of this balance sheet, prepare the balance sheet itself. Just giving you as well transactions, items, and the values. So with this is would be continuing the next slide. Here is the would be finished with the wages payable. Okay, this is the your table. Just I've divide on for the two parts is big one, and you have as well additional questions based on the balance sheet. The A, you have to answer what dollar amounts are the following items: the current assets, the gross planned property, which is the fixed assets, total assets, current liabilities, total liabilities, and total liabilities and equity. You have to just put the amount of the current assets, the accumulated amount, you know, not the like given in the balance sheet, in the box as here is. You have to accumulate all the current assets from the previous box and put in this table. As well is concerns about the fixed assets, liabilities, and equity. Okay? Dollar amount, this means in the value. You have to accumulate the items in the value and put in here is the amounts of the current assets, for example. Yes, this is concerns the previous slide, balance sheet. You see, this is additional questions from the exercise number 2, which is the balance sheet. This is the first assignment of the exercise number 2, and the theory questions is the second assignment from this slide, same. You see, this is additional questions to exercise number 2. And another one, additional questions for the balance sheet is you have to give answer to explain me what kind of items were not included on the balance sheet. You see, if you have this question, that means in the balance sheet, in the red table, you have some items which won't be included in the balance sheet, and you have to show me and explain me what kind of items are not included and why are they not included. Okay? Yes, true. You see, you are already giving me the answer that is the sales, because the sales items belongs to income statement, right? Like our taxes, this is all belongs the items to the income statement in the profit and loss statement, not in the balance sheet. So this is like for you to think and to have a differ from what items we include in the balance sheet or what items we are including in the income statement, in the different statements actually. Okay, any questions so far based on the exercise number 2? Okay, next one, exercise number 3. In the exercise number 3, you have 2 exercises, 2 assignments, I mean, based on the 2 different assignments. And this is assignments based on the depreciation methods. So before moving the next explanation, I have some questions. Just let me see. So any questions? So I have some questions from Mr. Nasrat Wali. Yes, if you have question, just let me know. Okay, some of you asking me the questions which is belongs to the assignment. You should done by your own. To find the answers, you have to I can't give you the answer. You should try to find yourself because that is a homework assignment, right? Okay, so let me explain the next exercise, number 3. So here is assignment said that the Cascade company has a quarter accounting period. But this is very important. So it makes the accounting statements based on the quarterly, which is the quarter is we have 4 quarters in a year, right? And 1 quarter includes 3 months, right? So on 22nd of March 2002, the Cascade company acquired a computer for 12,000, and management estimates the useful life to be 3 years of this computer. And at the end of the 3rd years, the computer will have no resale value. You see, this is very important. That means the computer have no any scrap value. It would be equal to 0. So using the straight line depreciation method, compute the depreciation expense for the quarters ended 31st of March 2002, 30 of June 2002, and the 30 of the September 2002. Here is in this assignment, you have to make calculation of the depreciation expenses quarterly. You see, already given the date on which date you have you have to make calculations, and you have to be considered about how many days you have in the month, right? This is very important because first of all, don't forget about that. The computer is bought on the 22nd of March, in the middle of the month. You see, each date is important when you do calculation and trying to find the depreciation expenses, right? And the second question in this assignment, you have to answer. This is a theory question. Why does Cascade company need to record depreciation on this computer? Okay. Actually, this answer is already given in the presentation, which is under the depreciation methods. Why we have to depreciate the fixed assets. But if you have your own thoughts, you can find additional information from your ebooks. You can write me your own answers. By the own words, it will be the best solution for me. So first of all, remember you make calculation of the depreciation cost quarterly, and here is given to you, and at the which date you must make calculation and find the depreciation cost. 31st of March 2002, the 30th of June 2002, and the 30th of the September 2002. You see, very important these dates. Next one. If it's no question by this exercise, we can move for the next one. Be concise about how many days you have in the month, how many months you have in the 1 quarter, and how many quarters you have in the year. Okay, the time is important when we doing the depreciation. So you have to give me answers based on the assignment only. What is given to you? Here is you must make calculation to find depreciation cost for these three kind of dates only. And don't mind about the rest of, only for this, okay? Okay, let's move. Of course, you see, if you need to find the depreciation cost for each month, first of all, you have to find depreciation cost for the each year, right? Then divide at the 12, which is the 12 months we have in the yearly. Then you can find how much the depreciation cost you have in the month, in the quarter as well. Just multiply on the 3, you can find in the quarter. You see, this is like I just explain you the steps how you should make calculation to find the depreciation cost quarterly. Let's move the next one. So exercise number 3. This is the second assignment under depreciation methods. This would be seems like it's confused, but don't worry. It's a lot of words, but the simple calculations in this assignment. Let me explain you. The research enterprises maintain the fixed assets at the cost. The original cost and depreciation are shown as separate entities in the balance sheet. This is just information for you, okay? The depreciation provision account is in use for each type of asset. You see, this the company research enterprise using different kind of depreciation methods for different assets. For example, the motor vehicles are to be depreciated at the rate of 12.5% per annum on a reducing balance method. But the office equipment is to depreciate using the straight line method. You see? In the year of the sale, depreciation is to be calculated according to the number of months owned. And the accounts are prepared annually on the 31st of December each year. So this company, that means the company are preparing the statements yearly, annually, for the each year at the end of December. So, another one, important information. The following transactions in assets have taken place. In the 1997, 3rd of January, the company purchased new motor vehicle by check at a cost of £21,000. At the 1997, 8th of March, the company purchased new office equipment costing $12,500 paid by the check. And at the 2000 of the 30th of September, it sold the motor vehicle for the $10,500 and received by the cash. The first important things, we have two different kind of assets, which is the motor vehicle, and the second one is the office equipment, right? The motor vehicle we're using to depreciate by the reducing balance method, right? It's already giving you depreciation rate. You remember? 12.5%. But office equipment is being depreciated by the straight line method. You know how to, you should know how to, you remember the formula by the straight line method. Just take your original cost and divide on your useful life. And as well, here it says that the motor vehicle is sold for $10,500. What that means amount, you remember? This is the scrap value, that we have some residual value for the motor vehicle. This information is very important as well. So now, assignment, starting the assignment. This is just, first of all, giving you information from this part, giving you assignment. Calculate the depreciation charges for the motor vehicle and the office equipment for the each year from 97 to 2000. The business plan to use the office equipment for 8 years. So you remember, right now, the office equipment would be kept in the business 8 years. The useful life is equal to 8 years, right? And as well, the office equipment would be depreciated by the straight line. You see, you already know how the original cost of your office equipment, how long you are going to use its useful life, and what method you have to use. And it is estimated that at the end of that time, it will have salvage value as well. It has some scrap value, which is £500. So now, based on the formula, it would be very easy for you to make calculations. Just take original cost of the office equipment minus its deduct its salvage value, then divide on the useful life, which is 8 years. So this already I'm explaining you the steps. And for decline method as well, you should remember you have some already the percentage rate which is given to you, 12.5. You won't need to make your calculation by your own to find the depreciation rates. As well, you know what kind of salvage value for motor vehicle would be. And so you know as well the original cost is 21,000, right? So this exercise seems that it's so big, but it's very simple to make calculation because all the information, all the items which you need, make calculation already given to you. Just read carefully each of the sentence which is explains. Okay, so I have some questions. Let me see what questions we have. So some of you says it's too much assignments. But not too much, because the balance sheet income statement, you already have a practical exercise. So that I am giving you another kind of assignment just to remind your knowledge, to keep your knowledge in your mind. Because this kind of science would be in the exam. So that is the best way for you to have more practice, right? For depreciation methods, I have given you 2 exercises only, which is both are simple one. So we'll see if you wouldn't have enough time to complete this practical exercise by the next Friday. I would give you, I would extend your deadline for this homework assignment. Okay, I can give you 2 weeks. So you should be able to send me your answers. Not the next Friday. Let me see. The date is would be 12th of April and the 19th of April. So the 2 weeks would be enough for you to solve this assignment. So the 2 weeks would be enough, I think so. Because at the futures we have the topics which is based on the cash flow statement. As well, we have stock method, costing methods. Like another calculation which would have a lot of practical exercises, and that we have to consider it as well. So that's all for your homework assignment. You already got it. I have sent you today morning. And as well, you have all the chapters based on today's class, right? The next class will be based on new topics, which is the stock costing methods or inventory methods, how to make calculation to find the inventory values. As well, we are going to study about the cash flow statement, because we have done already balance sheet statement, the statement which is the balance sheet, and the income statement, the 2 main statements which is using the business and the financial statements. And the last one, we have some cash flow statements. How to record the cash inflow and the outflow in the business is as well. It's very important for you to recognize it, to record it. So thank you a lot. If someone of you don't have my presentation, my slide, just let me know. Just email me. That is the best solution. Thank you for you. I hope you do understand. Hopefully, most of you. If any questions, just email me. So that's all for today. Thanks a lot for joining the class. So good luck, and just want to wish you the best weekends for these days. Bye.